Yo, what's going on, guys? Welcome back to the Calculated Risk channel. Today I'll be recapping the FUBO TV earnings. Okay, so again, the stock was up 9% almost today. At one point, I think 10 to 11% during the common hours, the market hours. But ever since after hours, it spiked after the earnings report dropped at about, I think it was 1 p.m. Pacific, 1:30 Pacific. It was a little bit earlier than expected, actually. I thought it would be dropping at 2:30 as their blog said, but that doesn't really matter. After it was at 41.92 at the end of market hours, and then it dipped a little bit. And after the earnings report hit, it hit 44 almost 43.68. I think I saw 45 on my screen at one point, but I don't really know for a fact. But and ever since then, when it retraced back down, then came back up, and now is plummeting down. Right, it's lost 5% after hours. Now, there's a lot of misconceptions out there about the earnings report. Even though it had a great earnings report, as in on the face value, it exceeds 100 million revenue in Q4, capping strongest year to date. It still missed. FUBO TV missed its EPS by $1.70. The earnings per share was actually negative, meaning that they were losing money. And that's not the worst thing because a lot of companies lose money, but it's not something you want to see, right? They're still doing year-over-year growth, phenomenal numbers, but they're still losing money, right? And that could be also another reason is people are probably likely to sell after earnings reports. After a great earnings report, it spiked up 10%, so meaning the people who swang the earnings report play probably sold off. And another reason could be the market sentiment, because if you have watched my previous videos on FUBO, I've talked about how many times Apple is a good example of how earnings reports can go bad, right? Apple had an earnings report of almost 30% up in revenue, which is great numbers like FUBO, but at that time the market sentiment was bad. By the way, this earnings report for Apple happened on January 27th. The market sentiment was bad, and the earnings report was proving that these companies were extremely overvalued. And ever since then, Apple was about 147 or 142 at the time of the earnings report, and it plummeted to 142 or 122, right? Which is almost a $20 per loss in share value, right? So the market sentiment could be bad. There's so many reasons why our earnings report could go bad, but the simple reason is FUBO TV missed by $1.70 on EPS, but beats revenue, right? Which is not that bad, but it's nothing spectacular that would cause a huge boost in stock price that's sustainable. When earnings report drops or something news drops, the price per share can spike for a small amount of time, as we saw in today's FUBO stock, right? It went from 40 to about 42, 43, 44, 45 in a matter of minutes. But, that could just happen because people are buying off news and not really reading into what's happening, right? FUBO did have a solid earnings, but still missed its EPS by $1.70. And that's a strong reason why it is going down ever since it spiked up after earnings. We could see a spike back up tomorrow, spike down, spike up tomorrow. No one really knows. But I'm just here to report about FUBO's earnings, and it's pretty solid, right? They did a lot of growth in revenue, but they're still losing money per share, EPS per share, right? So yeah, that's all I'm trying to talk about, you guys. Be always careful with earning reports. Okay, this is a very volatile time for earning reports. Even if earnings are great, as you saw with Apple, the stock price can still go down because of how inflated the market is in terms of valuation. PE ratios are out of the roof, and eventually there'll be a time where we see a pullback. Okay, I'm not trying to be a bear, but that's how it happens. The market works this way. Pullbacks, recessions have to happen at some point. The market is not linear completely. If you look at the whole time period of the market, it goes up because of technology and innovation. The market will always go up in the long term. That could be 10 years, 100 years. But in the short term, the market will pull back at some time, at some point. Okay? So I hope you guys enjoy this video. Please be sure to subscribe, like, and comment your opinions on FUBO. If you think I'm dead wrong on this, or I'm just wrong in general, you can dislike this video all you want. I want to see you guys' opinion. Leave a negative comment talking about how dumb I am for making this assumption, making that assumption. Remember, this is my channel. I'm here to give you my input. I make calculated risks when investing in the stock market, and I want to share you my opinion on these stocks, right? I also had one comment yesterday or today that said my volume was too low on my videos. I have now increased my volume on the microphone settings, so hopefully it's better now. But yeah, I'll see you guys on my next video. Maybe my next video is not FUBO anymore because FUBO earnings happened. Unless tomorrow something spectacular happens, either negatively or positively. So I think I'll be done for FUBO for now until we see something happen. So yeah, I'll see you guys on the flip.